Every crypto bull market has its own unique personality. In 2013, it was Bitcoin's first real breakout into the mainstream. In 2017, it was the ICO boom that flooded the market with new tokens. In 2021, it was institutions buying Bitcoin, the rise of DeFi, and the NFT explosion. Now, here we are in 2025, and this bull market has a different energy. It doesn't feel quite the same as past cycles. Some things are familiar: the hype, the FOMO, the wild speculation, but other things have changed. There's a different set of narratives, different types of investors, and a different level of institutional involvement. So what's really different this time? Does this mean the market will behave in a completely new way, or will history repeat itself once again? We're going to break down exactly how this cycle compares to past bull runs, what has changed, and what it means for investors like you. So let's start with what's different. One of the biggest changes in this cycle is the level of institutional involvement. In 2017, the market was almost entirely retail driven. There were very few large financial institutions holding Bitcoin, and crypto was still seen as a fringe asset class. In 2021, institutions started dipping their toes in, with companies like Tesla, MicroStrategy, and hedge funds adding Bitcoin to their balance sheets. But now in 2025, institutional adoption has gone to another level. Bitcoin ETFs are now a major force in the market, pulling in billions of dollars from pension funds, asset managers, and high net worth individuals. Major banks are offering crypto services. Large financial institutions are integrating blockchain into their infrastructure. This has completely changed the way money flows into crypto. In past cycles, the biggest price moves were driven by retail FOMO. Now there is a constant stream of institutional demand, which has created more stability, but also raises new risks. The same institutions that are buying Bitcoin now also have the power to manipulate markets, short Bitcoin, and trigger sell-offs when it benefits them. Another major shift is the narratives driving this bull run. Every cycle has its own dominant trends that attract new capital. In 2017, it was ICOs. Every project was launching a token, and retail investors were throwing money at anything with blockchain in the name. In 2021, we saw the rise of DeFi, NFTs, and the idea that institutions would drive Bitcoin to new all-time highs. Now in 2025, the biggest narratives are AI and crypto, real-world assets, and the evolution of DeFi. AI-driven blockchain projects are seeing massive inflows. Tokenized real-world assets are being adopted by traditional finance, and DeFi 2.0 is introducing new models for yield generation and lending. But the key question is, which of these narratives have real staying power and which are just hype? If history tells us anything, not all of these trends will survive the next bear market. The strongest ones will continue to evolve, while others will fade into irrelevance once the speculation dies down. There's another major difference in this cycle, and that is how altcoins are behaving. In previous bull markets, we saw extreme volatility in altcoins, with many tokens doing 100x or more before crashing 90% in the bear market. While there's still speculation today, we're seeing more mature projects leading the market rather than just random meme coins and hype-driven tokens. Layer 2 scaling solutions, real-world asset platforms, and established DeFi projects are all attracting institutional capital, which wasn't the case in 2017 or even in 2021. That doesn't mean speculation is gone. Meme coins are still pumping and low-cap projects are still seeing crazy gains, but there's a noticeable shift towards altcoins with stronger fundamentals. Another thing that feels different this time is regulation. In past cycles, crypto operated in a mostly unregulated environment. That's no longer the case. Governments around the world have introduced clearer rules, particularly around stablecoins, exchanges, and institutional investment vehicles. The approval of Bitcoin ETFs was a huge regulatory shift, but with it comes new challenges. Governments now have more control over how institutions interact with Bitcoin, and there's a growing debate about whether this is making Bitcoin itself more centralized. So, with all of these changes, does that mean this time will be different? The answer is yes and no. Some things are different. Institutions are a bigger force, regulation is more established, and the narratives driving this cycle are new. But the fundamental structure of the market cycles has not changed. We will continue to see bull markets and bear markets. Crypto still moves in boom and bust cycles. Every bull market brings massive euphoria, insane price predictions, and a belief that the market will never crash again. Every time people convince themselves that, yep, this cycle is different, and every time the market eventually proves them wrong. Even though institutional money is now part of the market, greed and fear still drive price action. Just like before, people will get overconfident. They will push prices too high, and they will then experience a painful correction when the market turns. Institutions may create more stability in some areas, but they also have the ability to short the market, take profits, and trigger sell-offs just like anyone else. So what does this mean for investors? Well, first, it means you need to respect market cycles. Just because this cycle feels different doesn't mean it won't eventually end the same way. History tells us that markets always correct after periods of extreme euphoria, no matter how strong the fundamentals seem. Second, it means you need to be selective about where you put your money. In past cycles, people made fortunes on tokens that disappeared in the next bear market. The key is focusing on projects with real adoption, strong fundamentals, and long-term use cases. Now, third, it means you need to have an exit strategy. Every bull market feels unstoppable until it isn't. If you're not taking profits along the way, you're risking losing everything in the inevitable downturn. Smart investors take money off the table before the market tops out. So, what's the big takeaway? Yes, this bull market is different in some ways. The players have changed, the narratives have shifted, and regulation is evolving. But the psychology of the markets hasn't changed. Greed and speculation still drive prices up, and eventually fear will drive them right back down. The smartest investors recognize this. They don't assume that this time is different. Instead, they study past cycles, understand market psychology, and make decisions based on reality, not hype, not what you hope it to be. Now, I want to hear from you. What do you think is the biggest difference in this cycle compared to 2017 or 2021, if you were around for that? Do you believe this market will play out the same way as before? Or do you think we're in uncharted territory? Drop your thoughts in the comments. And if you want to learn more about how to navigate the crypto market with a long-term mindset, check out learningcrypto.com. It's the best place to get real, practical crypto education. Thank you so much for watching. I'll see you in the next video.